Hello traders, and welcome back to another episode of my YouTube lesson. And in today's lesson, what I'll be talking about is the types of breaks we have. So when it comes to market structure, which I have already taught, we talked about the uptrend, the downtrend, and the consolidation. Now when we are looking at a price that is moving up or a price that is moving downwards, that is an uptrend and a downtrend, we have something we also call a break of structure, which I already talked about. So after the break of structure, we also have another break which we call the choke. So when it comes to the break, we have different types of break, which is the break of structure and the change of character, which is the choke. Without wasting much time, let's dive right in. So like I said earlier, we have types of breaks. So in market structure, we have types of market structure, which I already mentioned. So uptrend, downtrend, consolidation. Okay, now when it comes to the breaks, we also have different kind of breaks, or we also have types of breaks, and one of them is the break of structure and another one is the choke. Now when it comes to the break of structure, I've already taught that in one of my lessons, so you can look out for that. I've taught that into details in one of my lessons, so you can look out for that. And I also taught how to identify a valid break of structure and an invalid break of structure in details in this video also, so you can also check out for that. Now when we talk about a break of structure happens in a continuation market and a choke happens in a reversal market. That is, if price wants to reverse, that is when we consider a choke, and a break of structure when price is moving in a particular trend. So let's look at this example. We are drawing this is an illustration of price in an uptrend. So you can see price is forming a series of higher highs and higher lows. Okay, let me bring this here because I'm going to use this example. Let me draw it. Let me just draw it again. Like I said, when it comes to drawing, I'm not good. So all right, so let's look at this. We have a series of higher highs and higher lows, higher highs, higher lows, higher highs and higher lows. So this is a market that is moving in an uptrend. Now when do we consider our break of structure? We consider our break of structure when our new high has broken our previous high. So when a new higher high breaks a previous higher high. And now how do you know if this is valid or invalid? I've already talked about that in my video, so you can check it out. So now this is what we consider a break of structure. If price is moving in an uptrend, causing a series of, we have a high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, in that order. Now when do we consider a choke? Let's look at the difference here. Okay, so when do we consider a choke? So we consider a choke when the previous low, this was our previous low, this point here was our previous higher low. Okay, so when this higher low here fails to hold and price breaks that higher low, printing a lower low, then we consider this point as a choke. Don't get confused, get this clear. I'm speaking in a simple language so that even a child can understand. So what I'm trying to mean is that a break of structure happens in a continuation market when price is moving in a particular trend, breaking a series of higher highs and higher lows, or lower lows and lower highs. That is in a downtrend. Now when do we consider a choke? We consider a choke when price is reversing from a particular trend to another trend. Now how do you identify that? You identify that in an uptrend when the previous higher low, this is our previous higher low, fails to hold and then price prints another lower low. So this will now become our lower low. Price has printed a new lower low at this point. Okay, so price has printed a new lower low. So this point has now become our choke. This point. where the circle is, it's now become our choke. So we now have our choke here. It means price is moving from the uptrend now to the downtrend, printing a lower low. So this low has failed to hold, and this low has now become, or this point has now become, what we call the choke. Now someone may ask, so what does this mean? All right, so what this means is that the first sign or whatever comes into our mind when this happens is that the sellers are coming into the market. So there can be an exhaustion, then a push to continue the downtrend to form another lower low. So after the choke has happened, there can be an exhaustion forming what? Forming a lower high. Then it means that there is a shift in market structure. So once this lower high happens, there's a possibility that price will form another exhaustion, a push, exhaustion, a push. Then from this point, we continue with what? We continue with our break of structure. That is, if price decides to continue forming a series of lower lows, lower high, lower lows, lower high. Let's look at how demand and supply traders or institutional traders take advantage of this. Most of the institutional traders use this as their entry on a lower time frame. So assuming they do the analysis on their 4 hour, 1 hour, or whatsoever trader they are, especially on 1 hour or 4 hour, that is day traders, they move to the lower time frame like the 15 minutes. So anytime there is a choke and then there is a lower low is created, that is, a lower low is created after the choke is formed. What they wait for is that they wait for price to pull back into a supply zone, because this is an uptrend. We are not in a downtrend yet. So they wait for price to pull back into a supply zone on a lower time frame, a supply zone that has an imbalance. Okay, so anytime there is a supply zone that has an imbalance after a choke, what do smart money traders do? They take their entries from that zone, where retail traders will call the exhaustion or the pullback. That is where smart money traders will take their entry, especially on the lower time frame. Now let's move to the real chart and feel how this looks like. Let's now look at an example of a choke on a real chart. So when you look at this real chart, you can see that price is what? Moving in a downtrend. And you know, in a downtrend, we have a series of lower lows, lower highs. So we have price forming a high, a low, a lower high, a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now when price got here, what we were expecting is for price to form a lower high and another lower low and continue in that order. But look at what happened here. When price got to this point, let me delete this first. This was our last lower low. Okay, now after the last lower low, price has failed to form another lower low. I guess you are getting it. So price has failed to form another lower low, thereby pushing price up and then breaking this structure. You can see. So now what this means is that when price is moving in a downtrend and then eventually we have price changing its direction to an uptrend by breaking a previous high, and then refusing to form or to continue the previous lower low, then we have a choke. So this is our choke right here. This is our choke. This is our choke right here. You can see. So this is now our choke. So this is a change of character. Price is now moving from a downtrend to an uptrend. You can see that when price was moving in this area, we were forming what? A series of what? A series of break of structure, and price was, this market was trending downwards. We had a downwards movement at this point. Okay, so we had a downwards movement at this point, because price was creating a series of lower lows and lower highs. Let me do this fast so I don't waste time. Now you can see what is happening here. Price was breaking structure at this point. So we had a break of structure here. We also have a break of structure here. Now what were we waiting for? We were waiting for price to do what? We were waiting for price to continue breaking structure to the downside after this low. So we were expecting another low here, but look at what happened. Price pushed up. Price failed to form another lower low, and then eventually pushed up, breaking the previous lower high. This is our previous lower high, so thereby breaking a previous lower high. So what are we going to do now? It means that our trend is changing from a downtrend to an uptrend. So what are we going to do now? We are going to look for our key zones, and one of the key zones we have here is what? Our demand zone. This point. So this is our demand zone, which retail traders will call the pullback or the exhaustion. So we'll be waiting for price to pull back into this zone, then we can continue buying. Now why am I taking this as a demand? Because we had a break, we had a choke here, and we also have an imbalance. So our imbalance is between these three candles. So you can see that our imbalance is between here. Let me put it here, sorry. So our imbalance is between that three candle, and we are waiting for price to come back to that zone for us to continue buying. Okay, so now look at what happened. Now price has gotten into that zone because we had a change of character, and price has changed from a downtrend to an uptrend. Immediately price gets into this zone, which is our key zone or our point of interest or our point of value. Then we continue buying from here because we've seen a choke. So this is how we use a choke to make profit when we are trading. So you see what happened after this has happened. Look, we now had a series of break of structures here. So we have a push, exhaustion, push, exhaustion, push, exhaustion. So you see how simple this looks. So this is how we use a choke in trading, and this is the simple explanation of what a choke is. If you are loving this video, hit on the thumbs up button, subscribe, and also leave a comment below, because I have a lot of lessons I'll be bringing up on this channel. See you in the next video, and peace out.